The question for many is, will capital expenditure remain for Nvidia chips, for AI hardware writ large? Is that what you were tackling yesterday?
Well, I think that is one of the critical questions, right? Because this was a very surgical sell-off, a very surgical development, in the sense that it's attacking really not the case for using AI, but really the supply chain around AI, and all roads on supply chain lean back to Nvidia. And so this question of whether companies really need to spend this much, I think that is the question that markets are grappling with. But it's hard to imagine that we're going to see, and of course we'll see in earnings this week, but it's hard to imagine that we're going to see companies massively change their spending patterns simply because of this news. I think there's still this arms race going on. So of course that's something that we're going to have to watch especially closely. Yeah. But we may need more than just this news to unravel that.
But the unraveling could start when you have earnings expectations as they are and valuations at 41 times future earnings for a name like Nvidia. How much are you worried that this could have a similarity to what we saw in the dot-com era?
I mean, that's really something that we're watching really closely. When you're looking at earnings expectations for the broad market overall, you're seeing an acceleration of earnings, and of course, maybe not the same for Mag 7, but certainly a continuation of the powerful earnings that we've seen there. And then you couple that with valuations that are extreme. When we do our analysis of valuations and we break the time series for our price to expected earnings down into deciles, we're looking at the tech sector that's in the 90th percentile of valuations. Now, associating that with forward one-year returns, you can still see valuations grind higher and companies perform. But ultimately, that's where you also start to see some of these more meaningful sell-offs. And as pedantic as it sounds, I think a lot of these developments over the past few days relate more to a valuation argument than anything that relates to kind of technology, in the sense that this is big news in technology, but the bigger news is that there's no room in the narrative to account for anything but world domination when it comes to Mag 7. And this is allowing us to think about the range of outcomes.
Marta, to play the movie forward a few years, where do you see this taking us? Is this a parallel to the dot-com era, which, eventually after, some troubles right around 2000 really set us up for a long period of growth? What about AI? Are we in that moment?
Well, that's the corollary that I referenced. I know a lot of us are pointing back to the dot-com era and looking at the valuation argument. I think that's important. But I think the other important element is that this is an innovation supercycle, it feels like, just the way the dot-com era was. And what we saw in that period was a massive expansion or growth for the broad market, not just for the tech area. So if we're looking at the trend growth from the 1990s and comparing that to the realized trend growth of the subsequent years, we saw massive expansion, whether that's margins or enterprise value. The internet world had a huge impact on the broad economy. And I think that's what we can expect to see with AI. And in many ways, this news around DeepSeek is part of that, in the sense that it says we can economize, we can do this a lot better, and we can get deployment a lot more quickly than maybe we had otherwise thought.
And on that idea of getting cheaper AI out to companies and businesses across the economy, maybe a little bit faster, what sort of impact do you see, and where do you see growth potential from that?
Well, I do think there's this broad market where you have to understand that could be a variety of use cases that we can't perfectly anticipate. I think we're seeing hearing a lot more conversations around retailers and the deployment of kind of agency help find the right products more quickly with fewer steps along the way. I think that's one application. We're also seeing software stocks hold up quite a bit better. I think the idea that software can easily deploy, or maybe more easily deploy AI within their world, I think that's a possibility. So I think the applications are somewhat endless. The imagination, it has to be pretty broad here. And so there's some argument for kind of an equal weight exposure to try to capture that range of experiences, but with a long-term horizon. I don't think this is necessarily something that we're going to see in Q2, Q3 of 2025.
We're taking a few tech hits to your line, but we're going to stick with it, Marta, because I have this crucial point for the here and now, with retail actually buying back into Nvidia, institutionals not right now. What about a so-called black swan event or ripple effect? We talk, of course, to Nassim Taleb yesterday. Just have a listen to what he said.
Right.
Beginning of an adjustment of people to reality, because now they realize now it's no longer flawless. You have a small little chip on the glass.
A little chip in the glass of the valuation question, a little chip in the glass as to whether this is akin to a dot-com crisis. But where could be sustained? Will energy survive this? We saw such significant sell-off to certain of those names.
You know, I think when we're taking a look at Nvidia or energy, I think there's more vulnerability there simply because this is getting at the heart of the thesis there, that they are the, you know, especially Nvidia, the dominant provider of this capability, that all roads lead back to Nvidia when it comes to supply. And this story is really tackling that idea that potentially there's more ways to skin a cat. You can focus on efficiency rather than sheer run force. So I think the idea of a chip in the glass, I think that's important, and it's getting at the heart of Nvidia. But whether this is the beginning of, you know, the unraveling of all things AI, I think that's a little bit more extreme or a bridge too far today, simply because that unraveling would depend on the use case being attacked, the use case of AI being attacked. And I don't think that's what we're seeing here. It's more the supply chain question. And really, at this point, I think there's still more that we would need to see to really suggest that companies are going to pull back on their capital expenditures in any meaningful way.